Okay, I'm going to be going over another way that you can use support and resistance. All right. So with this way to use support and resistance, essentially what you want to see is you want to see a level of resistance in this example. At least it'll just be reversed for support, but you want to see a level of resistance get taken out, like right here. See this? Look at where my cursor's moving. You see that old high right there? That is a level of resistance. There are buy stops above that level. Why is it a level of resistance? Well, because it's an area on a price chart where prices failed to move higher in the past and is sold off. Okay. But we also know that there are buy stops. There's buy side liquidity above that level. So what does price do? It comes up and it takes that buy side liquidity out of the marketplace. Okay. So it purges that liquidity. Still a level of resistance. But unlike what a lot of people do, what a lot of traders do is they'll try to get their short, they'll try to get their sell as close as possible to that high to minimize the risk and look for lower prices. What you want to do in this particular way of trading support and resistance, you want to see that high get taken out, okay? You want to see that high get taken out. You want to see that buy side get purged out of the marketplace. And what you're going to do next is after those buy stops are purged, you're going to play this back down into a discount marketplace. So there's a couple different ways you could do it. You could just play it on this like one time frame, for example, which it's best to utilize different time frames. But for example, if we were to take our low from this low to that high, what we're going to do is we're going to find that we're going to find that price range. It's simply the price range from the low to the high of that liquidity purge, of taking out that level of resistance. And what we're going to do next is we're going to find 50% equilibrium on that price range. Anything above it, premium. Anything below it, discount. Okay. Again, anything above 50% equilibrium of that price range is a premium. Anything below it is a discount marketplace. So we took out that old high, and so it's in a premium. The weekly is in a premium. Now you could literally just play this time frame if you wanted to. I think it's best to utilize different time frames and to look for the market structure shift. But if you want to be aggressive, you could get in this as soon as you see that swing high get put in and you see that third candle get rated. So for example, right here we have we have a confirmed swing high. So you get your highest high in the middle. Look at my cursor. You get a lower high on the left, and you got a lower high on the right. That's a confirmed swing high after taking out that liquidity. After that candle, after that third candle closes, after taking out that established level of resistance. What you could do next is after that candle gets rated, that third low gets rated, you could just get into play and look for a sell down into a discount marketplace. It's literally that simple. You could look for a sell down into a discount, risk the high of that price swing, and just play that premium and discount range on the weekly chart. You could do that. Now, the better way though to play it is as we have gone over before, which is similar, basically like a purge and revert type of play. After you take out that high, look for that lower time frame shift of market structure. So once you have that lower time frame shift, you look for the swing high to get put in right here. So we have our shift up here. We have our swing high put in right here. See that high is in the middle, two lower highs on the left and the right. And it really didn't give you much of an opportunity. Oh, wait a second, my mistake. We actually had it up here. That's where it first happened, the shift. Kind of hard to spot. I think in the market structure video, in my market structure lessons, I used this one. But actually we had a break of a swing low right here. See this? See how we broke that swing low, then we put in our swing high right there after taking out that liquidity. So that's what you want to see on the lower time frame. And that's the best way to do it is, for example, we see the weekly get taken out, and then on the daily chart, what you see happen is you see a break of swing low level, which is that's your shift in market structure. What happens next? It comes up, it puts in a swing high level, highs down the middle, two lower highs on the left and the right. After you got that confirmed swing high, you know what you could do next? You could put in a sell, put your stop above the highs, and then target a discount marketplace. So let me go over that one more time. You have a higher time frame chart, and then you have an execution chart. Okay. Now I'm using the weekly and the daily for this example. Now you can use it on lower time frames, guys. Okay. Some people ask me, you should do more stuff on the intraday chart. All of this is applicable to the intraday chart. You just go to a lower time frame to do it. It's the same exact process, same exact signatures on an intraday chart. But in this case, the weekly chart is our higher time frame chart, and the daily chart is our lower time frame chart. Okay. Because this is how a swing trader or position trader would do it. Okay. For those of you that maybe can't be at the market all the time, this is something you could consider doing, like longer holds like this. Again, weekly chart, higher time frame. It takes out that level of resistance. That's our level of resistance. Okay. But then what we're going to do next, again, you could play that weekly chart, and then once the swing high is put in, you could just take it down into a discount. Safest play, utilize a lower time frame chart. So in this scenario, the daily chart, right here, we get our move below that swing low level. See that? Breaks swing low level, it pulls up, it puts in a swing high level. Once that swing high level is put in, you could get in short, look for sells at that point. At that point, you're good. What would you do next? You'd put your stop above the highs, and then you would target this low. So let's just see how much risk reward that would be on something like that. All right, let's just say you got in like this area right in here, around the area that swing high was confirmed and put in at. And so you put your stop up there, and let's say you targeted a discount marketplace, for example. That's over 2 to 1. So beautiful risk reward on it. Beautiful risk reward. And plays like that, I mean, you can be profitable with less than a 50% win rate. Be profitable with being correct less than half the time. That is another way that you can play support resistance. I used resistance for that example, but guys, it's the same as that thing. It's just turned around for support. A little bit of a different example. So this time with a buying example, you can see on AUDJPY here, we have this weekly low. This is our weekly level of support. Then price comes down and it takes out that weekly level of support. Okay, so we take out those sell stops. We take those sell stops out of the marketplace. Again, we're going to do the same process as we previously did. We're going to take the high. We're going to take the high to the low. We're going to measure that price range, and we're going to find 50% equilibrium. Anything above 50% equilibrium is a premium. Anything below it is a discount. So we took out that liquidity, aka our level of support. We have 50% equilibrium in that price range. Now the daily chart, which is in this case, our execution time frame. What do we see here? Now, same deal like we talked about earlier when I was saying you could just use one time frame if you wanted to. It's definitely a bit more aggressive, and it's better to wait on lower time frame and to have a lower time frame. But even the same deal with your lower time frame chart. If you want to be really aggressive, as soon as you see that level get taken out, that key liquidity pool, and you see a swing low get put in like this, yeah, we got a swing low right here, you could look for that move up into a premium. But again, that's more aggressive, and the best bet is to wait for that shift. So right here, you could see we had that push up into a premium, see that? And we broke a swing high level. Look right there, highs in the middle, 2 lower highs on the left and the right. So that's a shift in market structure. Not only a shift in market structure, but it's a high probability shift in market structure. Then what does price do next? It retraces within that range into a discount on the daily. Now at this point right here, it's in a weekly discount and it's in a daily discount. Okay, there's the weekly equilibrium. So we're below 50% equilibrium on the weekly now. It is best if it doesn't even pop above it. It's best if it has that shift, that swing low put in, and it's all below 50% equilibrium. That is the absolute best scenario that you can have. It's when it's all below 50% equilibrium and it hasn't traded above it at all. But in this case, we did trade above 50% equilibrium, but I wouldn't completely count out the play just yet, because you did just have a shift in market structure and it's now pulling back. It's now below. Now it's pulling back, and it's now back in the discount marketplace on the weekly because it's below 50%. And also on the daily, look at this. We pull back into a daily discount. So we're in a weekly discount. We're in a daily discount. We recently took that support. What do we want next? Well, if you want to be more aggressive, again, you could just get in on that last or on that first leg lower, risk to low. If you want to be completely safe with it, let the swing low get put in right here. See how we got our lows low in the middle, 2 higher lows on the left and the right. We get our confirmed swing low after a shift in market structure in a daily and a weekly discount. You could get long right there. You could get long right there, risk to low, and target that high in a premium marketplace, because that's your next key liquidity pool in a premium marketplace. Just like that, risking the low of that price swing right there. You could literally risk the low of that price swing after the shift and target that high. Beautiful out of this world risk reward plays, and if you're patient, you'll get plays like this on these higher time frame charts. And again, same thing. If you want to use the lower time frame chart, you can as well. It's the same exact process. Okay. But yeah, that's how you do it. Like that is another way that you can play support and resistance. It's by letting the liquidity get taken. It's still a level of support, but we don't play it like most people do. We don't try to get our entry as close as possible to that low and then look for lower prices. No, we want to see that support get tagged. I still consider it support. I still consider that support, even though it's gotten tagged, even though it's traded below it, it's still support to me. It's just tagging those sell stops. But then we want to see a reaction off that support, and then we could take it up into a premium marketplace. So that's what you're doing. You're using these key liquidity pools. You're using premium and discount marketplace. You're using what I've taught you in regards to market structure. You could put it together to make one solid strategy. That's what you're doing.